From the floor of the CME Group, this is Danny Riley from MrTopStep.com with today's closing print. I want to remind everyone that these are not our father's markets, our charts, and in no way, shape, or form are you guaranteed to make 1 penny doing this. Since my last video, the S&P was trading around 2,100. It's leapt all the way up to 43.85 half. That's a gain of 2,184.5 points or handles, or a gain of 558%. In the last 2 weeks, I said a couple really interesting things about the rally. Really, it was last week, and I've been writing about it. And that's that I didn't think that S&P 4,400 would come as easy as S&P 4,300. And the reason being is that the market's been so overextended, so overbought, and so much complacency that I felt going into the July expiration and into the earnings in the middle of July that there could be some type of decline. Now, little did we know that last Friday there was a leap in the put-call ratio, the highest level of put buying going on in the stock market since the election. The pit bull, I know you guys would like to know about that. The pit bull right now is in the middle of writing a new book. But he also has been telling me for the last month or so that there's always a 10% correction during the year. And I'm wondering, are we starting to see that correction now? The S&P is down over 85 handles right now, over 2%. And I'm thinking that we haven't seen this type of price action for a while. But the real main thing about this is the markets acted very funny last week. Every time the S&P would go bid, a seller would come in comes the sell programs. Everybody keeps trying to buy the dip, and it's not been working the last week or so, and it's surely not working today. From the beginning of the credit crisis, 2008, the Fed racked up a total of $800 billion in quantitative easing. That's debt that they put on their book. And since the new administration has taken over, they've racked up $6 trillion in stimulus. In addition, I don't even know the exact number of what the Fed has added. All this type of money flushing through the system, it makes it very easy for the buy side to come in, borrow money, and then put it right into the stock market. And I think that's really been the gist of what's going on here. The little investors been buying the dips and getting long, but you know what? There's an old saying, it's easy to buy, but it's much harder to sell. And I think that that's kind of the mentality out there right now, that this buy and hold forever type trade will last forever. Now, do I think it will last forever? I don't think it will. I think in reality is at some point that as the Fed starts to taper, the markets are going to sell off again. They always do. But that said, the dip buyers have had their way, and they continue to have their way. And I think as every other little pullback that we've seen, and again, when you look at the size of the rally, what is the difference of a 2 or 3 or 4% decline? It's nothing. It's nothing. I think what you've got to see is you've got to see a little bit more of this going on this week. And if the markets close weak today, which I'm sure they're going to, it could set the tone for tomorrow and later this week. But there is one thing that I'm very confident about. You can get 1 down day, you can get 2 down days, you can get 3 down days, but that's an extreme. But when you start getting out 4, 5, 6, 8 down days in a row, smart money comes back in. And I think that that's what's going to happen here. I don't think, if you asked me and you said, hey, Danny, do you think that the market's going to crash? I'd tell you, no, I don't think it's going to. I think that there's just too much money in the system right now. Everybody's flush with money that's been put on the side so that when the markets do fall, that they can employ that money. And the other part about this is the big institutions and the mutual funds, they're buying them when they're going up and they're buying them when they're going down. So if you're able to hold through these plunges and be able to add to your positions, I think you're going to do fine. Now, the real problem that occurred last week was there were several headlines. Now, usually what I would say is a 1 headline event will push the S&P down 10, 20, 30 handles, maybe 40 handles. And those are generally buy opportunities, at least the way I see it. But when you have multiple headlines that include the Fed speaking about inflation, talking about tapering, you have China tariffs going on, you have a surge in COVID, this rattles the markets. It's a little different. When you have multiple headlines all in a negative stance and everybody's long into the rally, you get this type of price action. Now, I'm not going to pretend to know everything. You guys have known me for a long, long time. And I'm sorry that I haven't been online. I've been using my Twitter and I was using Periscope to talk to the traders live. But I'm going to be doing more and more of these videos. I want to hear from you guys on the video channel or the YouTube channel what you guys think about what the markets are going to do. My own opinion is we're going to go back up. In fact, last year, right before the end of the year, I went out on my Twitter feed and I made a very bold call. At first, I said that the S&P would go to 4,400. Earlier in January and February, when the market started going up, I started talking about ES 4,600, and I still think that's in the cards. With all this money flushing through the system right now, it's going to be very difficult to make the market go down sharply. And if it does, you can bet that the Fed will come back in and employ billions of dollars to support the market and that the government will add more stimulus. So as long as the government is printing money like wild and the Fed's back there supporting the market, I think it's going to be difficult to fight. As I used to say, we're not here to fight the Fed and we're not here to fight City Hall. So in the long look of this, I still think you got to buy the dips, but right now the markets are weak and I think they could continue to be weak throughout the week. So we're going to leave it like that, traders, and we'll see you very soon on the closing print.